All right, let's jump right into this explainer. Today, we're unpacking the $3.4 billion Fortune 500 solutions integrator NSIT Enterprises, and we're going to figure out their true financial health as we head into 2026. If you've been following the IT distribution sector, you already know it is undergoing some massive shifts right now. So today, we're going to see exactly how NSIT is navigating these incredibly choppy waters. We've got some dense financial data to get through, so here's our roadmap. We'll start with an NSIT business overview, move into the 2025 financial highlights, check out their stock market performance, dig into valuation and financial health, and finally wrap up by comparing NSIT to its peers.
Section 1. NSIT Enterprises Business Overview, pivoting to an AI-first model. Let's get right to it.
To figure out who they are and what they're up to, we are getting our data straight from the source. Specifically, NSIT's 2026 annual meeting notice and proxy statement, which dropped on April 2nd, 2026. Basically, we're bypassing all the market noise and looking directly at what the board and executive team are formally telling their shareholders.
Setting the tone at the very top, CEO Joyce Mullen kicks off the proxy statement by thanking shareholders for their trust. And honestly, trust was definitely required here, because 2025 was a tough macroeconomic environment for tech spending. Her opening remarks are actually really frank about that reality, while also highlighting the positive momentum they managed to grab by the end of the year.
Now, NSIT provides end-to-end digital transformation globally, but their big narrative right now is an aggressive AI-first ambition. They're trying to move beyond traditional hardware distribution and into scalable cloud and AI solutions. To pull this off, the board laid out 4 core objectives. Put clients first, empower teammates, deliver impact with excellence, and, this is the big one, drive profitable growth. Keep that last one in mind because it is absolutely crucial to their story.
Section 2, 2025 financial highlights, because at the end of the day, the numbers tell the real story. Okay, let's look at the balance sheet for the full year of 2025. First up, net sales came in at $8.2 billion. Now, in a vacuum, that looks a bit concerning, right? It's actually a 5% decrease year over year, and generally speaking, shrinking top-line revenue is not what anyone wants to see.
But wait, here's where it gets really interesting. Their gross margin actually expanded by 110 basis points to reach 21.4%. That was driven by some really solid execution in their cloud and core services. So sure, they sold slightly less overall volume, but the services and software they did sell, way more profitable.
And because of that margin bump, their non-GAAP adjusted diluted earnings per share actually went up 2% to $9.87. This is the profitable growth objective in action. Shifting to cloud infrastructure and software as a service takes less capital and gives you a much better bottom line. It literally allows EPS to grow even when top-line sales are getting squeezed.
You can perfectly see that narrative playing out right here. Look at the dip in net sales on the far left. But then, scan over to the right. You've got steady gross profit hovering around $1.76 billion and that growing adjusted EPS. They are literally squeezing more value out of every single dollar that comes through the door.
Section 3, stock market performance. Zooming out to the broader market. So how did the stock actually hold up during this transition?
Well, honestly, it's been a pretty rough ride. If you had put $100 in at the end of 2020, it would have grown to just $107 by the end of 2025. Compare that to the broader market, it's severely underperformed. The NASDAQ US benchmark would have turned that same $100 into $187. Clearly, the market has been highly skeptical of NSIT's revenue declines, no matter how much their margins expanded.
Section 4. Valuation and financial health. What are you actually paying for right now?
With the stock sitting around $111 in early June 2026, we have to look at the multiples. And wow, this is a massive disconnect. The stock is trading at a trailing price-to-earnings of 19.42. But look at the forward PE. It literally gets cut in half down to 9.52. That huge gap means analysts are expecting some seriously improved earnings in the future. The market thinks this high-margin cloud pivot is going to heavily accelerate bottom-line growth over the next 12 months.
Before we get too hyped on that forward PE, though, let's peek under the hood at their financial stability. The Altman Z-score, which predicts bankruptcy risk, is sitting at 1.59. You generally want to see that number above 3, so that's definitely something to watch. Pair that with a middle-of-the-road Piotrowski F-score of 5 and a debt-to-equity ratio of 1.08, and the takeaway is pretty clear. Yes, they generate strong cash flow, but they're carrying a fair amount of leverage that requires some very careful management.
Section 5. Comparing NSIT to peers. We're benchmarking against CDW, PLUS, and CNXN.
Valuation never exists in a vacuum, right? So let's look at this side by side. NSIT actually has the lowest price-to-sales ratio of the group at just 0.4. From a pure sales standpoint, they look like an absolute bargain, but their trailing PE of 19.0 is higher than the sector giant CDW. That premium on past earnings, combined with the discount on sales, perfectly sums up the market's mixed feelings right now.
Which brings us to the million-dollar question. Considering their aggressive push into AI and high-margin cloud services, but also weighing that against a lagging 5-year stock performance and leverage concerns, does this setup present a genuine margin of safety for you as an investor? Or are the structural headwinds in traditional hardware just too heavy of an anchor? It is a fascinating study in corporate transformation. Hopefully this explainer gave you the clarity you need to make sense of NSIT's path forward. So what do you think? Are they about to turn the corner?